Okay, you see my charts?
Absolutely.
Okay, great, great. You said on there, I'm seeing you. I'm like, huh? Anyway, yeah, but yeah, that was it. Well, I'll go and get it started right now. And everyone, thank you and join us here on the New York Wrap. Um, as I mentioned, the time it's going to move around because this is a perfect example. Having the wrap right when the Fed's going to do the FOMC isn't really the wrap. You see what I'm saying? So, but as I
Yeah.
mentioned, for this first week, we want to kind of keep.
Added benefit, we cover the Fed minutes, right? In this case.
Yeah, I mean, but like I said, usually try and see where things because the wrap really is geared more towards if we're getting ready for Asia, what's moved and what are the levels we're looking at now on the wrap thing. I will say right now is looking here with the real nice rebound we've seen here in dollar CAD. My area of interest is right here at 34.46. It's had a very very nice rebound here. I know that Amanda was looking to go and pick it up, and she picked up right in the lows. We also had this morning, we had 33.71 as our bias chart support. Remember, it was 90 before, so we moved it lower. The low was actually 57, and I think Amanda was something looking for a low in I think 63. So we had 70. So, but my point is, we've had quite the rally here. Okay, so we've got it coming out now. So if we were to pop up to this 46, I think that'd be a great area for those that are long to go in and lay off. Looking here, hang on. Many Fed officials saw the inflation dip as likely transitory. I'm not really expecting a lot from this Fed minutes because what they were saying essentially was, to me, it's the cause and effect. Yeah, that there would be a potentially a cut if we saw the impact from the Chinese, the whole Chinese row. But you got to have the impact. So you can't look at it as anticipatory, like the market's going to price it in as anticipatory. But if you're looking for something from the Fed minutes, they're going to say, well, it's cause and effect. Let's see the cause and let's see the effect. So the whole China thing, it still isn't, run its course yet. And if we're going to see the effect, then that's going to play further out into the fall. But of course, the market's going to start pricing something right now. I'm not seeing any changes right now out of the dollar CAD here. S&Ps and
Fed discussed pros cons of shortening bond portfolio maturity.
Oh, okay, you don't. Okay.
Fed officials show patient approach appropriate for some time. Okay. Just giving you, titles as they come.
Mm-hmm. Okay, perfect. I mean, I think that people are, I think right now we've had such a phenomenal run here in the cash dollar index, nothing short of phenomenal. So it's going to take more to kick us into a higher drive. At least that's my thought. We've had our bias chart resistance here at 98.33. It's been that for the last couple of days. I think the dollar index did fantastic where it could have dipped yesterday and probably saw some more follow through, and it's held up relatively well. Tonight, tomorrow morning, early tomorrow, we're going to have the European PMIs. I think that's going to be more of a drag there. So you'll probably see the euro pair back, and our bias chart resistance down here is yesterday we had 1130. We just moved it just a hair lower, 1124. If you look at it here on the 2-hour chart, so getting a look ahead, which is really what the wrap is supposed to be, is really a look ahead for Asia. If you're trading the Aussie pairs, Kiwi pairs, or also maybe something ahead going into Europe, which is, as I said, we'll be looking at the European PMIs. I think that we can potentially get down here. You see coming right across, that's 11, it comes in actually right there, 1127.28. Got this dip here right there, 1125. Some nice touches. We'll probably want to challenge that. The key thing still remains is the daily on the euro, because I'm not seeing not much of a big change here with this FOMC, but it's kind of laying a big dud. But let's just take a look real quickly with the euro as we prepare, or we look ahead for the day ahead going forward. And I hate to sound like a broken record, but that's really the intent of the wrap, is really for those Asian traders. I mean, because like I make a point is that, you can look at your charts and say, well, I already know where things finished. Give me something else. And that's what it's supposed to be for is, okay, well, we have some Australian dollar today. Let's look at the levels we have in the Aussie yen, the Euro Aussie,
You have a
Aussie dollar.
question about the Kiwi, by the way, as well, whenever you want to go through.
Okay, okay. So to me, that it's going to be right here at the 11:30. That we may get down to 11:24 tomorrow, and the PMIs we get negative PMIs, which I think we will get negative PMIs. The key is going to be if we defend this 11:30 on a daily close. We don't defend on a daily close. Doors open for us to test 110 with a pause at 1080. Let's go and take a look here with the Kiwi. The Kiwi I thought held up very well. Hang on one moment. Let's move into that. We have this band here with the Kiwi. You see that between 65.17 and 64.96, and it's held up. I mean, it's barely hanging on by a string, but it's still holding up nonetheless. Looking ahead, hang on one moment. I'm kind of out of sorts. I've been, it looks like my antibiotics are finally starting to kick in. My throat's getting a little bit better, and my
That's good to hear.
starting to get a bit better too. Hang on one second. Doggone. I knocked out the, I had my window for my, my economic activity coming in today. Let's see, 22nd. Trying to move along too fast here. Oh, we do have Australian manufacturing PMI at 6 p.m. Well, actually, let's see here. I can remove this. In a moment. I'm still having a problem here. Hang on a moment. Let me get out of this. I know what I'll do is just close it out and bring it back on. Hopefully that'll score everything away. And let's move back in here. We do have Australian data today. And we're still hugging near these lows here on the Aussie dollar. And just beyond, we had this 68, 64 here. We're still trying to see if we can find, sorry about that, see if we can find a little bit of a lift. But we do have Aussie data. I'm going to try and bring on the calendar up here. Sorry about that. Should be able to get it right back up. But I actually accidentally expanded the window and couldn't de-expand it or minimize the window, however you want to go on and call it. Steve, are you looking for anything specifically with the Kiwi or the Aussie down here?
I think they're both in breakdown territory, and until proven otherwise, that's the case. I do have to admit, though, that there is a possible interpretation of a descending wedge price action since March 2019 to now in Kiwi. So I'm monitoring, that wedge for a potential reversal higher. That doesn't mean that I'm bullish. It means that, I do see that argument. And if that plays out, I'll look at it with a different pair of eyes.
Well, today at 7 p.m. Eastern, we do have manufacturing PMI. Hang on, I accidentally knocked this. Here we go. Let's see if we can. I'm messing this whole thing up all over the place. But anyway, manufacturing PMI, Australian manufacturing PMI here. And that's going to be at, well, depending on what neck of the woods you're in. For me, it's 6 p.m. Central. It's going to be 7 p.m. Eastern. And Australia services, same thing here. So that'll be, we get a chance for make a move here, here in the Aussie dollar. And one of the ones of concern, let me go in and, I can't minimize this or. I'll move it out of the way. Let's go and move into the Euro Aussie. Here's one of note. Let me get into that. Sorry, folks, over here jumping all over the place. Been out of sorts the last few days, so not have everything all right where I want it to be. But anyway, that being said, let's go and take a look at the Aussie, Euro Aussie here. And you can see what the thing we can do for the stars. As I mentioned, if you look at the what I call the chasm between the 927 exponential moving average, right, how wide that is. The last time we see it this wide was right here. You see, before we saw this thing turn around, and I think it may be susceptible here. I think it's susceptible for a pullback. We've already reached some key levels of 62 as well as the 61%, and we came up here and kisses 60. It's a process right here to probably break this trend line. Thing that happened is that then the I don't know if it was I don't know, I think it might have been Philip Lowe, but he was just saying that they would consider an interest rate cut, at least consider it for discussion at the June meeting. Well, that just sent the Aussie dollar, knocked it right back after it already come back after the surprise election, and open the door for us to move higher. We're just kind of languishing here, but let's see how this Australian data comes out. If it does come out, we have the opportunity to go in and break lower and challenge down here to 61 cents, even somewhat lower, and take out the lows that we had here for the Euro Aussie, which was on Monday, and go and make a punch low. We'll have to see though how that data comes out, but I think that's one of the more interesting ones. Another one was out here that Amanda had mentioned here with the move that we've seen here in the Canadian dollar. And let me get to that. Look at this wick here on the daily. And boy, this thing has just been, and I'll tell you what, it's not one pair that I follow very often now, but look how well the exponential moving averages have been riding this thing all the way down. And maybe we're starting to, might be able to go and get a bit of a bounce back in here. Do you have any ideas on that, Steve?
In Kiwi CAD?
Mm-hmm.
It's not a pair I'm closely following. I do look at it on occasion. The 61.8% fib of the last move higher is at 86.80. So that is a level to watch. But I also have a strong horizontal support area at 86.10. Having said that, somebody can even view this recent. Do you see this main area that you have on your chart?
I went right to the 61%. Look at that.
Yeah.
And it's not a daily chart, so we're forming a little bit of a mini hammer bottom right here.
Yeah, but on the other hand, Paulie, you can view this whole consolidation that took place between, let's say, November 2018 and April 2019 as a rectangle, which means that the breakdown from this rectangle should target, the extension being, equal height as the height of the rectangle, which would imply a move towards 85 cents. So, depends on how you want to look at it. But I do think that there is clearly very bearish momentum. The daily RSI is at 25, which means that one way or another, some type of mean reversion should come at some point. But I think that selling the rallies is probably the way to go until proven otherwise. Instead of trying to buy it. That's my 2 cents.
I mean, I would agree too, but look at it's the same thing, the disparity between the two exponential moving averages. So you pretty well oversold, and you're getting a little bit of a, think of it this way.
Oh yeah.
The way
some type of reversion, some type of pullback, likely.
You're at the 61%, nice fib here. You've got a lot of value coming in here because look at all these touches coming right across here.
Yeah, although we shouldn't forget that we can easily have the moving averages converge just by having a period of consolidation. We don't necessarily.
That's true, but I'm just saying its potential has a potential could make a move all the way back up to about 88 and a half. And
Yeah,
the resistance would come in right there. You can see that coming right across here, this close, this opening close, and then right here. So you come right here, that takes you to 87.74, 87.74. So we're 87.24. So easily with, a follow through for 50 pips right here.
today's candle gives some hope for a rebound because so far it's a hammer.
Yeah.
But you know me, I'm not a short-term trader as you are. So personally, I would want to see a lot more, to be involved with it.
What do you think about the Euro Aussie? Let's take a look at here on the daily. Hang on one moment.
I think that as long as we remain above 161.20, the path of least resistance remains higher. Now, it's also, likely that we're going to see some mean reversion, but I don't want to be involved in the short side as long as it trades above 161.20. As you see, it was a breakout area. We retested it. We rebounded from there. And I do see that, and despite seeing the signs of upside momentum loss, which is the first thing you want to see if you're looking for a pullback, I want to see more than that.
Mm-hmm. Mm-hmm. Well, I don't think it'd be a huge pullback, but I think we could take out these lows here. I think it's going to depend a lot. We'll see how the data plays out, but it's held up this trend line. I thought we had the opportunity to break the trend line until I think it was Lowe who said, "Hey, we'll consider a cut at the next meeting." And then that kicked the Aussie right back downstairs, and now we're just kind of languishing here. We're not really doing any upside. We're not really doing any downside. It's in a real tight pattern here. If you look at it on the 30-minute, and I usually have a tendency to look at it for me, my longer term play is going to be on a 2-hour chart. And you can see we're just not doing a whole lot of movement here. We're just kind of marking time right here.
Yeah, so far we're coiling.
Yeah, just holding there. That's why I think if we get some decent Aussie data come out, whether it's tonight or what, you can quickly see the same give back. I don't think it's going to come apart, but give back, break the trend line a little bit, and then we'll see if there's any more follow through. But like I said, they've made some rallies up in here, but they're quick to knock them back. They're quick to knock it back. They just haven't been able to break any lower. I covered a little bit of a short I had this morning on the European crossover, but as we did just below 62 cents. But I actually thought we'll probably see more follow through, but we'll see whether or not that transpires or not. Going back to the main screen. CAD's still holding up above here. I was hoping we'd get a run up here. I thought that might be a nice little opportunity to take a little quick scalp short around that 34, 45, 46, because we've had such a phenomenal run off of these lows. If you think about it, that would put us almost at 80 pips, but it's still holding here. The peso has continued to remain weak despite trying to go in and break out. Do you have any thoughts on the peso itself? It looked like it actually had broken above a trend line. You can see it here on the daily. And then
I think that USDMXN is a no trade for me as long as it remains trapped between 1930 and 1875. 1930 clearly a strong resistance area. 1875 not only a strong horizontal support area, but also a multi-year symmetrical triangles support. So I think the peso is going to be a very, very interesting pair to trade once one of these levels gives, because then we should have, probably volatility extending and some interesting days ahead. So I'm keeping a close eye to it, but I'm not there yet. I mean, I'm not at the point that I want to be doing something with it. But of course, as I said before, you and I, have different time horizons in our trades. So, for example, you might, be selling, the ranges resistance and buying the ranges support. Personally, I'm looking to trade it, differently.
Here's another one. Obviously, the elephant in the room is with the cable and with the May. There was some thoughts that she might even be resigning overnight, and I saw another thing that says really that realistically, although it probably will kind of pass, really would come in around June the 3rd. But we have this support here, a good level. There's actually some good value level down here, and I guess we have some people that are starting to pick it up, but we have this opportunity to come down to 25.98, and we know how much cable loves the 78%. Reminds me of that Wall Street movie, Blue Horseshoe loves Anacott Steel. Well, cable loves the 78%. It's always bouncing back and forth on either side, the upside, the downside. I'm thinking maybe they have one more flush, and then they'll be able to turn things around. And I think I don't know about Boris, but I think just about anybody they're going to get, I think is going to be cable friendly. What's your thoughts on that?
First of all, I see clearly 5 waves down in the last move in cable. The move that started from just below 132.
Mm-hmm.
So is the 5th wave complete? We're not sure yet. But today's low might even be the low. If not, I agree with you. The 78.6 is also, looking on the left side of the chart, is also an area that has produced some support on the past. So I want to note 2 things here. First of all, I think that cable, until proven otherwise, is a sell on rallies. But I would definitely be very careful in selling it here. I wouldn't be doing so because I think we're very, very close, and I don't know what's going to be the catalyst from a technical analysis perspective. It rarely matters what the catalyst is. But I do see a potential for a squeeze higher even for a few days to retrace at least part of this strong move lower. Same applies to the euro pound, which has had 13 consecutive up days. Both of them should, I think, within a few days start some type of a correction higher. Now, having to do with the cable, I would be focusing on 128 as a potential area to find resistance. Until then, as I said, definitely I would not be selling it down here, right?
Well, to me, I always go with these. My red line is always what I call the pivot. Where the market gravitates to, and then we get the push to the upside. We get the breakdown here. You dance around, you get knocked back. You get above it, and it's blue skies ahead. You come back down for support. You bounce again, come back down, struggle, and throw grandma down the basement. It goes down, and the same thing. So that's why I consider. To me, that's why I use this one, 29.80, as a pivot. And so 2 weeks ago, or was it 3 weeks ago, we're looking for a big breakdown. But then the market turned around, and here's what happened. Is we turned around, flipped around, and it looked like it was going to Venus. But one of the things I was looking at, if you look at the area above the pivot, right here, let's get this. You take the range above the pivot, okay? You see that right here?
Mm-hmm.
Okay, this range here. Then you turn around and extend it on the break of the pivot, and that takes us right to that 25.90, the 78%.
Yeah, in general, I have a lot of clusters of support, all of them gathered roughly between 125 and 126. It's not that just that which I hadn't noticed, the one you mentioned. It's also, for example, the 161.8% extension of the last rebound higher, the rebound that we had between 25th of April and a low and 3rd of May high is at 126.73, where we currently are. The 78.6%, as you mentioned, is at 125.88. Also, this is a nice horizontal support area. So, in general, if I remember right, Grega, from an Elliott wave perspective, also had a 5th wave target that would ideally bring us to 125.50. So, a lot of cluster support in the 125, 126 area.
Okay. And lastly, I'm going to wrap up. Fortunately, my voice is holding up much better than it has last couple of days.
Yeah, you sound much better.
Is on the dollar yen. Okay. Now, my take was, it's kind of come to fruition. I kept talking about since Thursday, barking about 995. I go, you got to watch out for this 995. We get past 995, we're going to 1062 with a pause of 1031. Well, that's pretty much how it played out. I mean, we finally got on Friday, we got to close. We finally were able to get up to 1005, and then certainly we went up to 1031. And the reason I'd come up with the 1031 was because I said we'd get to 1062, but we'd see a pause of 1031. That was a 38%, so I took it out by a pip.
What do you think about this move higher, though, in general? Because so far, to me, it looks likely corrective. I mean, this rebound that we had from the lows.
Well, we got up here to 1066. I thought we could get this stretch up here to 1090, possibly. Okay. What I wanted to ask you about is, and because this makes sense the way it's playing out. Okay, 1031, pause. Yeah, we got it back here. We were looking for 1070, but got as low as 1081, whatever. Then we made the move to 1064 or 1062, got up to 1066. I still think the door's open for higher, and we dip back, and that would make sense. So you gather your own, and you start to move higher. Is your thought then, you were saying it's just a correction, and then we turn around and roll back? Or
first of all, to be very honest, I wouldn't be really trading it. I mean, I think there are better opportunities out there at the moment. But having said that, yeah, the price structure tells me that it's likely that we're going to turn lower again.
Yeah, I'm just thinking here whether we have enough juice to make one more rally up in here.
We do. I mean, I don't doubt that we can move higher first towards your target, but this rebound higher, it's overlapping, it's quite choppy. It doesn't really inspire me that there is some kind of a bullish move that has begun, you know what I mean?
And we see the dollar CAD trying to push up a little bit higher. I'll finish up on that then, is because I like this area right here, that 1034.45 right there. That's a pretty good rally off of off of where we were earlier this morning here with the dollar CAD. Any thoughts?
After the good Canadian data that we had, because we had
that's what I'm thinking.
Pretty solid Canadian data today. Yeah. My thought about the USD CAD is that, first of all, given the data that we had, this reaction higher is quite important, and one of the reasons it's quite important is because this 133.80 area was a strong support area. Yeah, you have it there with some kind of a horizontal line.
Yeah, I had that 33.
Yeah. So we've seen, I mean, if you look at it, we've been coiling within this tight range, 133.80 to 135.20. And we seemed, after the good Canadian data, to be breaking below that area. But since, especially for me, that, you know, I'm trading mostly off the daily chart, since we seem to be holding above it on a daily closing basis, I think that definitely, at the very least, that means that we're staying range bound, which, given the fact that we've remained in a very slow uptrend, I think that's a decently bullish sign.
Yeah, it's just and you make a good point, because really with good data we should be lower, but we had all these opportunities to break out above 135 and we couldn't get higher. I mean,
yeah, but on the other hand, we don't seem to be managing to break lower as well.
Exactly. Well, I guess then the longer term would be, is if you're a dollar bull, then that might give us the extra onus to push a little bit higher overall if we get that. But yeah, this one is every time we go up to 135, people get all excited, and then we turn around and lay a big egg, and then if we try and break lower, we're not able to. We have this. My thought would be we push this week finally to lower. I thought it was going to happen last week, and it did dip right to the 33.82 and then pop right back up. And then just when everybody thought, okay, we're off to Venus, we turned around and laid a big egg and came off pretty hard on Friday. We kind of hung, and like you said, there's no follow through on the upside or no follow through on the downside.
We have a friend here asking for the USD SEK, and we can close with that. USD SEK, as long as it remains above 947, it's clearly in an uptrend, but I would be careful. I mean, there is some clear loss of upside momentum. I have a target since some time ago and a 161.8% extension at 974. I don't know if we're going to make it to 974, but ultimately, I think that a deeper pullback from anywhere between there and my target that I just mentioned is likely. Now, having said that, the USD SEK remains clearly in an uptrend from the end of January of 2018, and that's something that you should not dismiss. So in essence, don't fight the trend. If you're looking for short-term fading, I can see that happening. I can see at least a pullback towards to retest 947. It can happen from here or from a little bit higher, as I said. That's my point of view.
It's still early in the week, but a little bit of a greystone doji, but the week's not that long.
Yeah, but look at this momentum loss. I mean, we also have some RSI divergence, by the way. So, it doesn't seem to have much steam behind it anymore.
Mm-hmm. Okay, well, thanks for joining me on the wrap, and well, like I said, we'll see what transpires here with Australian data, which is going to be out later on this evening, and the ones I'll be keeping an eye on will be obviously the Aussie dollar and the Euro Aussie too. That'll be one to go and keep in track. It's depending on how I think the data is going to make a difference as to how much weight the market gives with the idea that the RBA may be looking at a rate cut. I don't see why they would do a rate cut yet, but stranger things happen. But we'll see how that plays out.
I think they mostly want to prepare the market for the possibility, Paulie. I don't think they're ready to pull the trigger, as you said.
But the market's pricing it in as if they're going to pull the trigger, I think.
Partly.
I mean, at this point, that's what I'm saying.
Yeah.
I think it's a little bit susceptible if we come up with a little bit better data, but the data certainly hasn't supported it, and probably the Aussie's holding up a lot better than most people would have thought at this point overall. But thanks for joining me on the wrap.
Thank you, Paulie.
Okay, have a great day, everyone.